Let's talk a little bit more about what's in store for emerging markets. What are some of the near-term concerns and which asset classes should you be invested in 2021? Richard Harris is Chief Executive at Port Shelter Investment Management and now joins in on the show. Richard, thanks so much for taking time out. I just want to address what's going on with respect to the dollar index rather, and we are seeing quite a bit of a strong move coming in there. How do you believe this is going to hamper FII flows into the country, and what's the general outlook on the liquidity situation coming into India vis-a-vis some of the other emerging markets?
Dollars in it's been an unusual phase. It's actually been quite weak over the last year against many currencies. Extraordinary moves against things like the Australian dollar. It's depreciated by around 10% even against the euro. So we've seen quite a bit of weakness, but this has really been a reaction to dollar strength over the last 3 to 4 years. So I don't think the dollar is necessarily on a weak phase. So what we're seeing at the moment, I think, is more of a reaction to the fact that we've been fairly weak. We've got a little bit of maybe concerning news. So we're having a bit more move into the dollar. It looks as if there's going to be relatively little impact to interest rates on the short end. And that's probably, I think, in favor of the dollar now because it's no new news. In terms of what we're likely to see, I think, for emerging markets is that we have to remember there's an enormous amount of liquidity out there. It seems to be the general consensus in the US that Biden didn't have to put $2 trillion into the economy to get it going again. So really what he's done is add fuel to the fire, added a lot more liquidity, and that liquidity has to find its way back into markets, not just in the US, but also around the world.
Fair enough. And what is your sense as to, how you're looking at the overall move that we're seeing in the Indian markets off late? Of course, that's largely guided by what's happening overseas, as well as the kind of fund flow situation. But do you believe that the undertone for the Indian markets does continue to remain strong? Or do you believe that we should now temper our expectations in terms of year-end returns, given everything that we've been through, as well as the kind of move that we've seen, a very ferocious one on the upside?
Well, of course, it's been a fantastic year. I mean, I'm having fun looking at some of the movements at the moment. If you're looking at what's happened over the last 12 months, and don't forget, we came from a very, very low base 12 months ago. I mean, as far as I see, India is up, what are we talking, 65, 67% or something. Many other markets are the same. The Russell small cap is up over 80% in the US. The S&P US markets up 50, 60%. These are extraordinary moves for any year. So to see a pullback on some uncertain news, I don't think is too concerning. I am generally concerned about the market. I'm concerned about inflation, but I don't think it's going to come yet. And I think there's so much good news out there to come through. These small bits of recovery news we're seeing from the low base last year. I think that's going to keep markets bubbling along for a while. So, yes, we're still moving upwards. We're still moving really into a bubble. But there will come a time when the chickens come home to roost. I don't think it's going to be for the next 6 to 12 months.
Okay, fair enough. And what's the analysis, Richard, when it comes to, different asset classes? How would you look at exposure to equity vis-a-vis some of the other asset classes? Any thoughts on the Bitcoin? I'm not going to probe you there, but just want to know what your view is in terms of diversification in one's portfolio. What do you believe is the ideal mix?
Well, diversification is always a good thing because, if you've got 2 assets or 3 assets or 4 asset classes, you can only be partly wrong. Or is it partly right? So, yes, I am in favor of that. Bitcoin, we are in a stage where we're seeing some unusual moves. Bitcoin, for instance, may well continue to go up. Tesla may well continue to go up. There are absolutely no fundamentals associated there. Where there are fundamentals, I think, where the tech stocks have been strong, I think they'll probably still continue to be reasonable investments. When the market's going up, the trend is your friend. But I think we're also likely to see, looking not too far out, some improvements for the banks because we're in that situation where banks can borrow very cheaply and lend quite expensively because the yield curve is getting steeper and steeper. And it reminds me of the old 1970s joke about commercial banks, them being 363, which is borrowed 3%, lend at 6%, and on the golf course by 3. So I think that we're in a situation where, that's the sector that may do well from current fundamentals.
All right, Richard, thanks very much for being candid, sharing with us your outlook, where India stands, some of the concerns, as well as what you would be watching out for.